Good afternoon, everybody, and welcome to our webinar on the global packaging materials industry, where Mintec Global, in conjunction with 4C Associates, assess what's in store for food packaging materials, which are namely metals, plastics, and paper materials, as prices trend at record highs. Now, just to set the scene, the last 13 months have coincided with a prolonged rally in the global food commodities and food packaging prices, which can be, I'd say, largely attributed to various supply and demand responses through the key stages of the global pandemic. Now, as a vital cost component, changes in packaging prices have direct impact on food supply and value chains, which may ultimately be felt through the prices that either end consumers pay, as well as the margins that food vendors make. And against this backdrop, it's imperative for procurement professionals to gain an understanding of the main factors driving the market, and also the things to keep an eye on for going forward as a way of mitigating some of this price risk. So this webinar aims to help arm you with some of the relevant information needed to make prudent and well-informed decisions regarding your packaging spends. So just to introduce some of the speakers. So from the side of Mintec Global, we have myself, I'm Ibi Adonaboy. I'm a senior market analyst at Mintec. I typically cover soft commodities and seafoods, and I will be moderating the webinar today. Joining me, we have Alana Barosh, who is our market analyst. Alana deals with various markets, typically grains, as well as looking at some of the packaging materials, including metals and paper. And we also have Archit, who is a market analyst here at Mintec. Again, he covers various markets. He looks at oil seeds as well as some of the other commodities, and he will be looking at the paper market today.
Okay. And good afternoon, my name's Kevin Moore and I'm from 4C Associates. I'm a senior manager there, and myself and Mark Boswell will be giving some insight from our what we're seeing in the market as well. 4C Associates are a medium-sized consultancy with approximately 100 employees, and we specialise on procurement and supply chain management, along with business transformation and cost reduction.
Thank you, Kevin. And just before we start, our introduction to Mintec as well. We are the world's leading provider of commodity pricing and insight, covering a wide range of food and non-food categories with over 10,000 data sets. We also use advanced analytics through our Mintec analytics platform to interpret our market data. And if you would like to know more about Mintec and our analytics platform, please visit our website at www.mintecglobal.com. We'll provide those details at the end also. So looking at the agenda for today, so Mintec, we will give you an overview of what's happened in the key packaging markets for H1 2021. So we'll be looking at metals, Alana will be providing you that insight, as well as plastics, which Archer will be providing, and then Alana also finishing with paper. We will, as I said, look at the price movements for H1 2021 and some of the key drivers for those movements. And 4C Associates will also provide key insights into client experience and behaviours before Mintec then provides the outlook that we expect for H2 2021, so for the next 6 months for each of these groups. So moving on. Before the analyst gets into the deep dive, I will give a very broad overview of what we're seeing happening in the global packaging prices. So as an overall index, looking at the metals, plastics, and paper. So this index that I'm showing here is our global packaging index, which is one of Mintec's key proprietary pricing series, which comprises a blend of paper, plastics, and metals and packaging materials used extensively in the food industry. So this index here uses January 2020 as a base, just to give you some context of the movements over the last year and a half or so. Now, since bottoming at 87 points in May 2020, so just over a year ago, the packaging MCI has charted a sustained bull run, gaining 91 points over the ensuing 13 months. So currently at 178 points on the 21st of June this year, which was also 56 points above what we were seeing in January 2021, so six months ago. So you can see a very prolonged and sustained price rally for these commodities. The sharp trajectory was largely influenced by the metals and plastics prices in comparison to the paper prices. So the European steel hot rolled coil price increased by $533 per ton, so it's about 64% between January and June this year. We also had Chinese hot rolled coil, also increasing quite significantly, so about $259 per ton, or 24% during this time, to $880 per ton. So these are the key drivers. You can also see that plastics showed relatively or comparatively steep increases again. So the USPP increasing by 45% during this time, and the EU LDBP increasing by 77%. So you can really see that the sharp trajectory that we've seen is really driven by the metals and the plastics. Although you can still see paper prices have increased as well, for some of the key paper prices, just at a relatively slower trajectory compared to the metals and plastics. So I will now pass you on to Alana, who will give you an overview of the metals packaging market. Over to you, Alana.
Thank you, Evie. Good afternoon, everyone. And I would like to start this part of the presentation mainly looking at steel. So steel was the commodity that was mostly impacted during the first half of the year. So with the CME hot rolled coil prices rising by as much as 103% H-on-H. So as we can see from the graphs, the growth trend has been quite steep, and in fact, prices have been on an upward trend since the last quarter of 2020. So why did prices increase so much? Prices increased during the first half of the year mainly due to a supply and demand imbalance and continued repercussions from the COVID-19 pandemic. So China continued to be a main player, importing large volumes of steel, and at the same time, many economies continued to reopen and recover, as was the case for Europe and the US. So all of this generated large demand for steel products. This was in a time where feedstock prices were going through the roof, as was the case for iron ore, which surged to record highs, and crude oil and as well shipping costs all rose substantially and restricted the number of imports coming both into EU and the US. So supply was still very limited due to relatively reduced production capacity from mills, and despite an improvement in production compared to the last 6 months, it could be reported that supply was overall very short. So overall, as a result, global steel prices were trending at record highs, with all of this being reflected on packaging products like Tinplate, which was also influenced by increased purchases of canned vegetables and prepared foods due to the COVID pandemic. Similarly, if we look into the aluminium prices, we can see that global prices have surged during the first half of the year, mainly supported by the same drivers, so of strong demand from economic recovery and also brisk import volumes from China. China is the largest exporter of aluminium, but since 2020, it has emerged as a net importer. So it was a main driver and contributing to limited global supply and to high prices. So these high prices for LME aluminium and high shipping costs, as previously mentioned, meant the aluminium premium to Japan, for instance, or to the US were trending around $880 to $250 per metric ton. So this increased significantly the price of aluminium materials in those regions just because of the premium. So all of this also continued, also due to strong demand from the beverage sector, was seen across aluminium packaging products prices. So materials like aluminium foil and can also have increased substantially, supported by the high aluminium prices. I would like to pass on now to Mark from 4C to give a perspective of the procurement side on this.
Thank you very much, Alana. Good afternoon, everyone. Mark Boswell from 4C Associates. What I'd like to try and do in the next slide or so is give you an idea of what some of our clients and what we've seen from contacts in the marketplace on what they are trying to do to offset, or at least to go some way to offset these steep increases in steel and aluminium prices. By no means are we going to say they've managed to offset everything, far from it, but what are the things we're seeing that they are trying to employ with some success? So we've seen 5 mitigation strategies really and behaviours with our clients. One is in the short-term mitigation and trying to increase commitments towards suppliers, and in a lot of cases trying to hold more stock in various forms through the supply chain. And the second bullet point is reviewing where they buy from, locally, regionally and globally, and a review of their supply chain to get the best supply and contingency. Holding stock in various forms in raw and semi-finished and finished goods, either on premise or at suppliers. The third one we've seen is in conjunction with sales teams, production teams at our clients, switching production to SKUs with a wider availability, so they are not shorting customer supply. And we've seen in some cases changing packaging format, not so much in metal, but you'll hear more about that in plastics and paper. The other one is in form of hedging, which is trying to safeguard raw material prices well in advance of packaging production upstream in the supply chain. And the fourth one is trying to address some contract clauses and giving a reason to revisit contracts with suppliers to make sure they have visibility of pricing through the supply chain and pricing and raw material elements in the packaging that they are buying, if they haven't, of course, got that visibility already. Okay, so some successful strategies we've seen deployed in metal packaging. I'll hand you back to Alana and she'll go through the outlook for the foreseeable future.
Thank you, Mark. So where do we expect metal prices to go next? So going forward, we expect prices to continue rising, and HRC or hot rolled coil steel prices in both the EU and the US are projected to rise, mainly on the back of high consumer demand as economies continue to recover, also supported by incentives from government. We also expect high input costs to be a significant factor behind these high prices. So with the cost of iron ore and shipping costs all high at the moment and still expected to remain high throughout the next 6 months, we expect this to influence the prices of steel. Especially also as the number of COVID cases across main exporting countries continue to rise. This could potentially impact trade opportunities and create risks for prices. Although steel mills capacity is expected to continue rising, especially with the high prices at the moment. This might encourage producers to increase capacity. This is something that will take time and it does not happen quickly. So supply overall is expected to remain limited. Similarly, aluminium prices are expected to continue rising over the next 6 months, supported by this reduced supply availability. China aims to become greener and to reduce carbon footage. So this is likely to impact the primary aluminium production. And as the largest global aluminium producer, China is the largest aluminium producer, is likely to, carbon production is likely to tighten the global market. So therefore, at the same time, trade flows are estimated to be disrupted by this shortage of containers, leading to high shipping rates, and also the implementation of tariffs and anti-dumping measures is going to be a significant factor, as this was the case for recently Russia. Russia has announced an export tariff on primary aluminium. So all of this could lead to high prices, despite production expected to continue growing. We might see prices higher towards the end of 2021. So now I'll pass on to Archid, who will talk about the plastic market. Over to you, Archid.
Hi everyone, thanks Alana. I'll be taking you through the EU and US plastics market, focusing on PP, PE and PET. I'll first go through the 6-month update from H1 2021 and end with the outlook for the rest of 2021. Just before I begin, an overarching theme across all of the plastics market I'm going to talk about today has been the tight supply and firm demand over the past half of the year and even the end of 2020. Starting with the EU PE markets, we've seen high prices in both LDPE and HDPE markets in the EU, primarily driven by the aforementioned tight supplies and firm demand. Due to this issue, there have been long delivery times and unpredictability in supply from many of the producers across the EU, and as a result, only 50% of the order volumes have been filled. Soaring freight rates have also been an issue for the continent, with limited container availability and delays in cargoes hindering supplies. Imports from the US and Middle East to Europe were particularly low, further supporting prices. Even in cases where suppliers have been willing to pay for the imports, the delays have meant that they've not been able to get their hands on them, and this has caused bottlenecks in the supply chain. Priority was given to existing orders, and any new orders have either been stopped completely due to force majeure or have been placed on an extensive backlog. On the demand side, there's been firm demand for food and pharmaceutical sectors, supporting LDPE prices. Although, with delivery times for LDPE film reportedly up to 10 weeks, market participants are having to wait significant periods of time to get their hands on their products. There's also been some degree of panic buying, as consumers saw the spiking prices and bought early to avoid having to absorb these rising costs. In the HDPE market, availability was also very tight, and the start of maintenance season during Q2 2021 had worsened the shortage of material in Europe. The main driver of HDPE demand has been the automotive sector, although the amounts demanded have not yet returned to the pre-coronavirus levels. For the US PE market, prices have also skyrocketed over H1 2021. These have mainly been driven by the aforementioned reduced availability and the supply shortages that intensified in the US resins market following the severe winter storms during February 2021 and the hurricane season of August 2020. These two events primarily affected the petrochemical plants in the Gulf Coast and resulted in over 50 major outages and resin plant closures during the period. As a result, many factories were placed on force majeures and aimed to meet the backlog of their customers' orders rather than generating new orders. The US HDPE contract price reached the highest level since 2008 in May, and since then has only continued to push past this. The LDPE price also hit a record during the same period. These price surges were supported by the declaration of force majeures for LDPE and HDPE plants in Canada during April, particularly for Nova Chemicals, which is one of the top 5 producers of the product in North America. According to market participants, the availability of HDPE and LDPE continues to be exceptionally tight, which is likely to result in further price increases in the short term. There have been some reports of some factories reopening. However, the supply available is much lower year on year and has not been sufficient to meet the existing demand. Additionally, as we see some of these factories reopen, we've also seen other factories go into force majeure and limiting their supply. So overall, the market remains fairly tight. In the EU PET market, prices have also surged in the last 6 months, driven primarily by the aforementioned tight supply and firm demand. In May 2021, the prices hit a level not seen since November 2018 and have only continued to push past this since. In terms of fundamentals, producer stocks have been exhausted in Europe, and the start of scheduled factory maintenance in April only weighed on supply, causing prices to be supported. There's also been low availability of the PTA feedstock caused by plant problems in Belgium and Poland, which has contributed to higher prices for PET itself. Additionally, imports from the US have also been lacking due to a tense logistics situation and limited supply within the country itself. This has contributed to an increase in prices in EU PET. On the US side, the PET market has also spiked over the past 6 months, supported by the bottlenecks of the supply chain following the winter storms in February. As a result, imports from Asian countries have increased. However, with the rising logistical costs, these have also fed into the market, increasing US prices. PET bottle resin prices were, however, stable in Q2 2021, as the input costs of feedstocks such as PTA and PX were relatively stable, which has caused the market to flatten somewhat, although it still remains on its slight upward trend at the moment. For the EU PP market, this has also been driven by the severely limited availability and high demand that has been mentioned across the rest of the plastics. There were several outages for polypropylene plants amid solid demand and panic buying early on to secure supplies before prices increased. This has exacerbated the situation and led to EU PP prices going through the roof in the past 6 months. PP prices also gained momentum from the rise in the cost of the feedstock propylene. Extremely tight supply is expected to drive prices higher in the short term, with many converters curbing production on the back of the already extremely high prices, as they feel they can no longer pass the costs on to their customers without affecting their demand. Finally, on the US PP side, this has also been driven by the tight supply and logistical distributions that has been true for the rest of the packaging market. US PP prices had in fact started to ease during Q2 2021 as the price fell around $420 per metric ton in the 6 weeks to the 19th of May, as plants began to recover from the impacts of the outages in February. However, despite these factories reopening, the supply still remains well below the level seen last year, and they're operating at a reduced capacity. There still remain force majeures in place, and for every factory lifting restrictions, there seems to be another factory going into restrictions. The supply situation, therefore, remains very tense. Now that I've run you through the EU and US PET, PE, and PP markets specifically, I wanted to run through some more price drivers that affected the price over the past half year and will continue to do so in H2 2021. The first is the crude oil price. Crude oil plays a key role in the prices of plastics, as generally increasing crude oil prices mean increasing plastics prices. Global oil prices continue to trend upwards over the first half of 2021, with increases seen in both WTI and Brent crude oil prices. This is a significant recovery from the slump we saw in 2020 when prices fell at the start of the pandemic. Despite a slight decrease in prices during Q2 2021, as there was a global resurgence in COVID-19 cases, prices soon bounced back, supported by strong economic recovery in line with the vaccine rollout program. In Q1 2021, the US economy actually recorded its second fastest growth rate since 2003, supporting the idea of the vaccine rollout program success. However, some concerns still remain about demand in India, the world's third largest oil consumer, due to the second wave of coronavirus cases we are seeing there, although this is steadily improving. On the topic of coronavirus, as we recover from the pandemic, there should be an increase in demand for industrial and packaging plastics from the hospitality and external food sector. Although I've mentioned there's been a resurgence in COVID-19 cases during Q2 2021, the pace of the vaccine rollout program has presented optimism around this subject and is likely to improve the situation going forward into the rest of 2021. As we gradually see coronavirus restrictions being lifted, this should increase things such as worker mobility, which, amongst other things, will lead to increased demand for crude oil and other fuels, which will contribute to price increases in the plastics market. And with improved economic recovery, in line with the improving coronavirus situation, we'll see firm demand from particularly the industrial sector, which will likely support prices in the plastics markets, both in the US and the EU. I'll now hand over to Kevin to go over client experience and behavior within the plastics market. Thanks.
Okay, thanks a lot, Arshit. As we've been hearing that industry has been struggling with both the tight supply, unpredictable deliveries, and extremely high pricing that we've seen. So in 4C we've picked out some specific trends just to highlight what we've been seeing from our participants. Okay, so I think the first one, and these ones are in no particular order of importance, but one of the things that we've been seeing is that manufacturers have taken the opportunity of reducing the SKUs that they're offering. Now that's got obviously the advantage of allowing them to focus on higher volume, reduce the complexity, and work with reduced number of products, and make difficult to obtain and difficult to forecast packaging materials go further. The other thing, another feature we've seen in the market is that manufacturers are looking at really look at the processes to determine where's the optimal point to introduce customization, particularly on print, and have really been looking at the processes to introduce that customization as late as possible into the process, so that they can direct scarce packaging materials towards the right products. At the same time, we've also been looking at on packaging materials again, for plastics and films, on rationalisation of some of the generic films that are being used. And again, that's just all about making available product go further, reducing complexity in the business. We've seen some products switching from paper to plastic-based packaging, as really to reflect some of the difficulties in obtaining paper-based packaging. And our view is that is not going to change the long-term sustainable goals that we're seeing food manufacturers and food retailers undertake. Probably the most obvious one of that has been on eggs, where there's been quite major shifts towards plastic packaging, but we see that as being temporary. And in fact, as industry is coming back post the COVID crisis, we're seeing reports that retailers who have previously not had sustainability on their core activities are now picking that up and driving that further. So we expect this trend to continue. Another key factor we've been seeing is that, as Arship said, we've been working through a period of about 3-4 years of quite steady pricing to declining pricing. But with increased volatility, people are now re-looking at hedging strategies, looking at futures for their pricing, and where they've not had them in place, looking at price adaptation contracts. As Mark said earlier on, for metals, same factor. People are looking at increasing stock holding and working better with their manufacturers to increase their commitments and the visibility of their commitments. And I think just a final point on this is that not everything has been equal for all parties. The manufacturers of plastic packaging materials have been a lot less flexible towards their smaller accounts, have favoured their larger accounts, and so the smaller people have suffered more probably in this from availability than the larger players. Okay, pass you through to Alana, who I think is covering the next section.
No, it'll be me doing the outlook for the plastics market.
Thanks. Sorry, Archie.
No, it's fine, don't worry. In terms of the market outlook for EU plastics over the next 6 months, we see prices increasing 10 to 15% for the EU plastics blend, which is an even blend of all the aforementioned PP, PE, and PET markets in the EU. To clarify, This price increase is 10 to 15% above the average price for H1 2021. And this is presented for the EU plastics blend, which is an even blend of the EU PET, PE, and PP markets that we covered today. As a result, there will be some caveats to this 10 to 15% price increase, but I'll come back to these shortly. We see EU prices being driven by the same factors that have affected the market this far in 2021. We see tight supply and firm demand driving the markets, with issues such as expensive freight costs and limited feedstock availability, as well as expensive feedstock availability, driving prices even higher. Additionally, as we see economic recovery from the COVID-19 pandemic, we'll see increased demand from the industrial sector, which will spur prices even further. COVID-19 developments will need to be monitored in order to determine which way the market will go in the coming 6 months. But overall, we believe the market to be pushing higher by roughly 10 to 15% over the coming half year. The caveat to this EU plastics market outlook is the EU PE price, which has begun to move lower over the past month. However, before leveling off and moving lower, the price had already increased significantly to the point where it is in line with our outlook prediction. Additionally, the EU market as a whole has begun to level, and although you can see from the graph the price has moved past our current estimate for the average price, we believe with suppliers having increased production capacity as plants begin to reopen, the price will even out and fall within our outlook prediction range. For the US market, the story remains largely similar, driven by the same factors I've been mentioning throughout this whole presentation. The only caveats are the US PP price, which has been volatile but is now moving upwards again after some weakness in Q2 2021. The US PE and PET prices remain firm, although their trajectory has also flattened compared to the past half year. Hi, Ron. That's it for the plastics market update. I'm going to pass it on to Alana for her paper market update.
Thank you, Archid. So moving on into the paper packaging market, similar to other packaging materials, the paper market was significantly impacted by this supply and demand imbalance, all due to the repercussions from the pandemic. So the biggest increase was seen across the linerboard materials. So with testliner in particular being impacted by strong demand and limited supplies. So the booming of the e-commerce sector led to an increase in demand for paper packaging. And this was during a time that, due to lockdown restrictions, recovered paper materials was very limited. And therefore, this impacted largely the overall production of container boards. And this was reflected across recycled paper grades, as it was the case for testliner and GD carton board grades, as we can see in the graphs as well. So also contributing to this supply shortage, there was some plant outage in some paper mills across Poland, Italy, and France during the first quarter of the year, together with some scheduled maintenance during this period. So all of this contributed to reduced supply and resulted in increased lead times for most paper materials, which was further exacerbated by the Suez Canal blockage and also the high shipping costs, meaning that less supply was coming into the EU overall. If we look into the US paper market, we can see that similarly to the EU market, the US paper market was significantly impacted by this boom in demand from the e-commerce sector, as well as having limited supply availability. So as previously mentioned, the high shipping costs limited the trade and supply into the US. Also, the freeze during February impacted some of the paper mills production and reduced the production. So overall, also impacted the transportation of materials across certain regions. So all of this led to inventories falling, and by the end of the first quarter of the year, mill inventories were reported to be 27% lower compared to the previous year. So all of this supported prices in the US. Plant were operating a reduced rate as well, and high demand resulted in high prices of feedstocks like pulp and old corrugated case. So all of this contributed to overall a bullish market. I will pass on now to Kevin, who will give us an overview of the paper packaging from the procurement side.
Thanks, Alana. Again, if we want to go on to the next slide, I'll just talk through some of the key trends and key behaviour changes we've been seeing in the market. So we've talked a bit previously just about the increased lead times that people have been seeing, and similar to plastics, that's affected paper as well. On paper, one of the consequences of that is that it's had an impact on promotional activities that have been planned with manufacturers either not being able to get the print runs for packaging tied into promotions due to either increased volumes or due to the timing. That's had the effect of a number of promotions either being cancelled or moving through to different mechanics in order to do them. And in particular, ones which are very time critical, for instance, like the Euros, we've seen several suppliers have been planning promotional activity tied in with the football, but have again had to either change or scale down that promotional activity quite significantly. Another trend that we've been seeing is that suppliers, manufacturers, and indeed their customers have been working together really to accelerate packaging specification changes, which have become necessary in order to keep products on the shelf. And there's been a huge amount of activity going on changes, whether it be changing things like white liner to brown liners, just things, activities that would normally take quite a long period of time have been done, very, very quickly over the past few months. And I think that's, a great testament to the industry's ability to innovate and to find ways to get around problems that have been presented. We've heard previously that in addition to the availability, there's also been quite significant issues on shipping, especially from the Far East, and people who have relied extensively on products from countries such as China and India have had severe disruptions in their supply. So that's people, especially say the QSRs, who rely very heavily on that supply chain. In the short term, people have been moving to spot buying from Europe, but they have had issues with variable quality and indeed significant price increases. And what we're seeing more and more is that these customers are working more and more with strategies to increase the volumes with nearshore suppliers and move more of their volumes into either to Europe or indeed to the UK for if they're a UK-based customer. Final point, again similar to plastics, is that the sustainable agenda will continue. We're seeing, even in the light of disruptions to supply chain, we're seeing significant products moving from plastic through to paper. So recent announcement by Smarties of their branding change and moving everything to a paper-based product. So that again, that trend is continuing and is continuing to gain speed. Thanks a lot. I'll pass you back to Alana, who will cover future pricing intentions.
Thank you, Kevin. So overall, where do we expect paper prices to head next? So the EU paper market overall, as a trend, we expect to continue going up due to strong demand as economies continue to recover, as previously mentioned. The reopening and removal of lockdown restrictions are also likely to support demand for packaging materials overall. So although production is expected to increase with the possibility of import volumes rising as productions increase in the US and Asia or other parts of the world, it's important to highlight that the high shipping costs at the moment could potentially continue impacting this trade. Also, the scheduled maintenance for some paper mills towards Q3 of this is likely to impact supply. So it's important. It's also important to highlight as a trend, as was previously mentioned by Kevin, that the paper market is adopting and having the substitution for certain paper materials from certain plastic materials for paper due to this high link of sustainability. So we are increasingly seeing more companies adopting the use of recycled packaging materials. So for instance, recycled plastics, but also some companies moving entirely from plastics to paper and aluminium to an extent. So it is, as an example, some fast-moving consumer good companies have now recently started producing paper bottles for beverages instead of plastics. So this was previously mentioned by Kevin, that this is something that will continue to impact the market overall over the medium to long term. Now, looking to the US paper market, a similar trend is expected. So overall, we do see prices continue to rise, supported by the similar drivers: the increased demand from home delivery and economic recovery, the link to sustainability. Production capacity is expected to continue rising, but it may put some pressure on prices. But overall, inventories are below average levels, and the next 6 months average price is likely to remain above the first half of the year. So overall, we expect a bullish market for the paper market as overall. So I'll pass it on now to Mark.
Thanks very much. Just before we get into the wrap up and the key takeaways, which Ibi will take us through, we wanted to ask you a poll question. You've heard a little bit from the team and from Kevin and I on which mitigation strategies we've seen employed with clients, suppliers, and through the supply chain. But we'd like to ask you which of the successful strategies that you have seen used to offset material prices and increases over the last few months. And we've given you 6 options, and you can pick one, you can pick none. You can pick all 6, but we'd like to hear from you as to which of these strategies you've seen employed or employed yourselves to try and offset these high and severe material price increases. So we've got one around product specification. Are you changing? Are you switching alternative materials? Are you working jointly with your suppliers and through the supply chain to have better planning, partnering, and upstream supply? Are you working on the relationship with your suppliers, perhaps reducing the supplier base? Improving the supplier relationship? Are you concentrating volume with a few suppliers, or still looking at best price evaluation if you're able to do that, or global sourcing, nearshore sourcing, locally or regional, and looking at other supply options? And of course, there is another one if you think you haven't covered sufficiently with the previous 6. So please click the buttons and press the submit, and then we should get the results in a few moments, I think, Ellie.
Thank you, Mark. So I'd just like to firstly thank all the speakers for their presentations, including the guys from 4C. It was very valuable, and really appreciate the insight into that. So I guess to summarize what we've what we've seen in today's webinar, first thing is that packaging prices for most of the packaging that we talked about today, metals, paper, and plastic, continue to surge beyond historic highs as we speak. And the factors that our speakers have spoken that contribute to the high index for the packaging includes obviously the COVID-19 recovery and the macroeconomic growth that we're seeing on the back of the vaccine rollouts and the reduction in infection rates, etc. So we're seeing that as one of the main drivers on the demand side. On the supply side, we're seeing some plants with low utilization rates, particularly we were talking about paper, and we're looking at stock depletion. Also, that's obviously adding to tightness in the market. On the costing side, we're seeing high feedstock costs, crude oil prices surging, high iron ore prices, which are all contributing, as well as on the supply side, we're also seeing these bottlenecks in key regions, particularly out of Asia, and these surging shipping costs due to the lack of crates and lack of availability of crates to ship. So we're seeing that these are the real strong, fundamentals on both the supply and the demand side. I think obviously it's key to mention as well, Chinese demand has been particularly robust for a lot of this packaging and a key driver. And the demand's obviously bounced back very strongly since around May, June last year. As we're going forward, we have firm price expectations across the key packaging materials as laid out by our analysts earlier. And I think what was very interesting that the guys from 4C mentioned was, how buyers are responding, how they're changing the relationships in order to stay ahead of the curve and try not to mitigate some of this price escalation. Some of the ways in which we're seeing this was hedging raw material prices, so hedging in advance of packaging production, adapting contracts, maybe holding on to more stock in the form of raw or semi-finished in order to have some type of integration to offset some of the higher buying costs. Also seeing some short-term spot buying as opposed to getting into mid to longer contracts where the product is not necessarily available or where there are some of these freight or supply delays. So I think these are some of the key themes that have come out of this webinar. And again, I'd like to thank everybody for their input into it.
And just before we finalise that point, I think we got the results of the poll.
Fantastic.
Thanks to those who contributed. So we can see out of the 6 questions, B, joint process improvement, was the one which most of you said is the tactic or the strategy you've been employing. Almost 30% of people said joint process improvement with suppliers for better planning, partnering and joint ways of working. And then the second most used strategy was product specification, reviewing that and switching to alternative suppliers and alternative materials, and the third one, very close third, was restructuring the relationship, having fewer suppliers and trying to upgrade and partner with those suppliers to get the best deals and the best security of supply. So thank you for participating.
And thank you for those results on that. I think it was very interesting actually in the sense that during this environment, rationalization has taken place not just across workforces but also across relationships. So maybe having less suppliers, changing those relationships, stripping back. So it's very interesting that it almost bears out what's happening in society as a whole. So thank you very much for that. So before we finish and head off to the questions, I'd just like to again thank everybody for listening to this webinar. I hope they found it enjoyable, or at least hope they found it helpful in some ways. Just to quickly send apologies to, I believe we have some viewers who were struggling with some of the visuals or some of the audio. So I'd just like to apologize and say that it will be available for you all on demand. So you will be able to get the full recording of this webinar after. So apologies again if any disruptions at all to your enjoyment of this webinar. And as you can see, the contact details of Mintec are here in case you want to reach out to any of the analysts or to find out a bit more, or to have a look at our analytics or our offerings, as we mentioned at the start of the webinar. So that will conclude that part of it. We'll now open up to questions and see what some of the watchers have been interested to find out more about. So I think first one we have here. First one we have here is from Joanna Lewandowska, and it's a question on Tinplate. And the question is, which is based on steel, what is the perspective for price development for H2 2021 for China compared to now, or compared to June? So what is our perspective for prices of Tinplate for the second half of 2021 for China, comparing it to where we are around now?
Thank you, Ibi. Thank you, Joanna, for your question. So as previously mentioned, because we do expect steel prices to continue rising over the next 6 months, we do expect Tinplate to follow similar trend. Of course, not to the same price increase as we saw even now from the first half of the year. Tinplate, although Tinplate prices have risen, it hasn't risen to the same magnitude. So we do believe prices to continue rising, following the similar trend from steel, just due to increased demand and lack of supply. But yeah, overall, for China, I see that your focus is mainly for China. For the purpose of this presentation, we're mainly focused on US and EU. But yeah, we are happy to come back to you as well with more insights on the Asian market. But overall, globally, we do expect an upward trend for the next 6 months.
Thank you for that, Alana. Seeing as you answered that so well and succinctly, we also have another question, which is on the metals as well. It's from Jimena Aguilera. And the question is, can we get a view into how the sustainability pledges from multinationals will drive pressure on the metal supply chains, i.e. away from plastics into metal containers? Do you have a view on this at all? Again, to Alana.
Yeah, sure, of course. I think we touched upon this already with the sustainability. I think Mark touched upon this as well. There is an increased shift between products, so more companies now are looking for sustainable packaging. So yeah, we do expect this trend to continue. So as we previously mentioned, some fast-moving consumer good companies are adopting and moving away from plastics altogether. Of course, the aim is just to use recycled materials. So we see the adoption of recycled plastics, but some of them are moving away completely and adopting metals and even paper as the new form of packaging. So we do expect this new trend to continue overall, and yeah, it is something to keep an eye on, and it is something that we believe is here to stay for the medium to the long term.
Thank you, Alana, for that answer. I'll direct a question towards Archit now. The question, Archit, from Stefan Michel is, do you expect any impact for PET price due to the EU import tariff on MEG from the USA or the Middle East?
Thanks, Ivy, and thanks for the question, Stefan. So in terms of the actual import tariff itself, we do see slight impacts from the tariff being imposed simply because due to limited supply in the EU, quite a lot of the supply has been coming in from those two regions, the USA and Middle East. Hopefully, as the supply in these two regions improves, though, the prices coming into the EU should reduce and should hopefully help to offset the actual tariffs on the products.
Great stuff. I think we have time for a couple more questions. So we have a question regarding paper from Ilda Spadafora. And the question is, how much longer do we suspect paper to be impacted into 2022, specifically the North American market? So how much do we expect the impact on the paper market to continue in North America?
Thank you for your question. So yeah, of course, for the aim of this presentation, we focused mainly on the H2 and outlook for H2. I think at the moment it is too early to be outlooking anything beyond that, just because of the nature of the market. It is very volatile at the moment. It is not something that we have revealed at the moment. But looking into the current conditions of the market and the current trend, it is very likely that prices will correct at some point, just because of the high trend that they are at the moment. That it is likely that there will be some sort of correction. But overall, we don't expect prices to be as low as it was in last year's level. So prices could fall, potentially correct is likely, but it will continue higher on a year-on-year basis.
Fantastic. And I have one more question for Archit. And the question is from Eric Gertsen. And it is, could you please elaborate on the reasons behind the mentioned factory outages and force majeure situations, especially within plastics and paper market? So make sure that Archit and Alana.
So in the US in kind of August 2020 last year, you had hurricane season, which is also something that could affect the outlook this year as well, with it approaching. And that affects all the plants in the Gulf area, which is kind of a key concentration of resin plants in the US. And then just as you had plants recovering from the effects of that, we had another quite harsh winter storm across the US in February 2021. So it kind of never gave plants a chance to recover fully. And as a result, they had to apply force majeure, otherwise it would have been overwhelmed by new orders. So as I mentioned during my presentation, they're kind of meeting the backlog of orders as opposed to taking on new orders, simply because they're so tight for resources at the moment. Alana?
Yeah, so the plant outage that happened was mainly due to weather impact during the first quarter of the year. So there were a few companies that reported plant outage in France and Poland. So there was some impact to some paper mills, but it was mainly due to unexpected weather events, but also some sort of energy outage that impacted the paper mills, and it was mainly related to those things.
Thank you very much for that, and thank you, Archit. Thank you, Alana, for the questions and for the answers. Sorry, and I'd also again like to thank the guys from 4C for their invaluable inputs into this presentation. And fortunately, we couldn't answer all the questions. However, we'll do our best endeavor to try. So if you wanted to reach out to us directly, or we'll look at some of the questions afterwards and try and respond to as many we can. Other than that, I'd just like to wish you all a good day. And again, thank you for taking the time to listen to this presentation. Bye-bye.